Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we have all sorts of large tech news, mainly speaking about XAI, okay, Nvidia, OpenAI, Oracle, these sort of names. Now, if you guys have been paying any attention to today's news, I am very excited about Nvidia. Obviously, we saw some potential lack of Stargate funding between OpenAI and Masayoshi Son, but that is, I think, trumped by larger news that we ended up seeing from Elon. Elon went on quite the tweet spat lately, talking about the size of OpenAI, or sorry, XAI, all these AI names, right? And just how large this could potentially be, which is unbelievable. Now, although there was a little bit of Stargate or Stargate OpenAI news, we also did see that Sam Altman was posting some pretty interesting posts, doubling down on the fact that they are looking for an additional 4.5 gigawatts of capacity with Oracle as part of Stargate. Okay? Unbelievable. They want to push forward an additional 4.5 gigawatts of data center. For Nvidia is essentially $40 billion per gigawatt, 50 billion if it includes networking, and that's for every single gigawatt. So we're talking about another total year of additional growth. Evan says, YouTube sent me a notification that you were live. I know. Well, what's it called? Tuesday. We're supposed to be live right now. I think maybe tomorrow, and then not tomorrow either. Sorry. So I don't know what to tell you, Evan. We're supposed to be doing a podcast together, but I thought I'd go live regardless. I thought I'd try a little bit earlier. Maybe it's better for people. Maybe this is a time where people actually have a little bit more free time, that they're not going to bed super early. So you guys let me know if the 7 o'clock to 8 is better than the 8:30 to 9:30 type range. But yeah. What's the best energy play? I'm trying to figure this out myself, okay? It's so clear that the demand for the artificial intelligence that we are about to see going forward is insane, ladies and gentlemen. I mean, unbelievable sizes of deployment here. Like, if we go ahead and look at these two tweets from Elon, okay, this alone just speaks to the level that we're talking about right now, okay? XAI's goal is 50 million in units of H100 equivalent AI compute. Okay, so this doesn't mean he's looking for 50 million units of H100s, but he's going to look for the equivalent compute. So let's say if the Grace Blackwells are 30, 50 times better in that sort of space, then that obviously, cuts that number down pretty quickly. But just the fact that 50 million units of the H100s, this used to be the premier chip, it just goes to show you that that's what they want in 5 years. Does the overall space just end in 5 years? I actually think that it'll continue to grow, and potentially maybe the goals after 5 years are just hard to assume at that point, right? Like, what jobs will be artificial intelligence? Which jobs will be which jobs will be artificial intelligence? Which one will be humans? It's hard now at this pace, especially at the rate in which we're growing, to know what we're even going to need. And that could potentially be bearish as well, but I really don't think that's what's going to happen. I could not be more bullish right now for Nvidia. And the fact that we got a small drawdown, let's remember the space that we're in right now, okay? The truth is that what we ended up seeing recently was that Trump will allow Nvidia to sell their chips over to China, the H20s, if not even a pared down version of the H20, which is their smaller end chip, even lower than the H100s, to China, which could be as large as a $50 billion run rate business for them into the future. Okay. That got added. And since that's gotten added, I think we were at, for Nvidia, 164 on the price of the stock whenever that happened. Now we're at 163. $3 of ads for $50 billion of revenue over the next, like this won't be potentially in the next 12 months, but probably even more forward than that. We're probably looking at closer to, let's say 30 billion, 30, 40 billion right now. And then into the future, it'll be 50 plus billion. Um, and honestly, I actually don't think so. Nvidia profit margins will gradually decline. I don't think that's what's going to happen. I actually think the demand for artificial intelligence chips are increasing. I think that the margins will increase over time. There was a small decrease in margins due to the ramping of Blackwell, but that has been like we will end up seeing the better half of that from the second half of the rest of this year. So yeah, I actually disagree with those comments from Helpless Boat. Let's see here. Um, I hope Tanner bought Aurora Innovation with my donation, not Aurora Cannabis. If it's the donation, I don't remember off the top of my head, but it was AUR, right? I got AUR, Aurora Innovation. Yeah, AUR. I was confused though whenever you were talking about Aurora in terms of Aurora Cannabis, but no, I got Aurora Innovation. Whatever ticker that you put on, which was I think AUR, is what I got. Thank you, by the way. I thought SoFi was going to close in the teens today. I had my tail ready. Yeah, that's funny. No, I mean, today is a wild day. We had like Nvidia being obviously the number one name that had by far the most options written on that name, but obviously it's a $4 trillion company. That's bound to happen. But then you have other names like Opendoor closing at $2.88 today, which is just insane. Seeing the massive run up to, 497, then back down to 288, even lower than that in after hours at 261. But the speed in which these names move is just insane. Evan says Apple's green. I mean, we don't even need to talk about that though. Really, right? I'm more of a sweetness kind of guy. I like whenever apples are red. Whenever apple's red, I feel more at home. No, I'm just kidding. Evan loves Apple. I think that they're a good company. I just think that the stock is expensive. That's all. Competitors will rise. I doubt it. I doubt it. I think Nvidia will also rise. And the thing about being the number one player as well in this massive space is that you also attract top talent. Get over it, Evan. Fold that phone. Yeah. Yeah, we'll see what Apple ends up doing. AMD is great. I also think AMD is great. AMD is fine. I've just chosen my winner, okay? And I think that I like very fast growth rates at very high margins. I'm not saying AMD will do poorly, but there definitely is a winner in this space with the highest amount of total sales, and I like betting on the winners. I think that they have a great knack to continue winning. Alex Chris put out a cryptic tweet. Ooh, Evan. He said 2 hours ago, "Are you ready?" That is fun. This is the PayPal CEO. Are you ready? Holy. I'm ready. What could that be? Could that just be for earnings? That sounds... I hope that's not about earnings, because that sounds like you get yourself into some trouble. But if that's about a new product release, new announcement, something with deeper ties into stable coins, cryptocurrency in general, that could be right up his alley. Artificial intelligence, some sort of agentic commerce, that could also be very exciting. That would be big. PayPal is coming. Yeah, I mean, potentially. Yeah, it was a globe for the emoji. I see what Evan says. You get to choose. You think he went this deep? You get to choose. This is the level of conspiracy that people like Evan get into in markets, which I love. I mean, that's where investing gets so fun. And he picked, if you could see it here, he picked more of the one that's showing off Europe and Africa here. Europe, Africa, bleeding into the Middle East and maybe a little bit of Asia over there. But as Evan said here, you have 3 different choices depending on the rotation of the Earth. That's, I don't know. Could that be? I wonder how many countries they're in terms of different African countries. Would he post that out because the total market share there would be small? I don't know. Maybe that's globalizing the stable coins, because that would be a really big use case, right? Like, stablecoins are more useful in other countries other than just the United States. It actually makes more sense to have stablecoins in, countries that have potentially worse dollars or unstable currencies. That way they can park their money in places where, or like US dollars that are more stable and not have to worry about inflation too much. And then if you have common things like remittances in those areas, that potentially you could send and receive payments easier to people that are in America, Canada, stuff like this. Maybe that's it. I'm honestly just spitballing here. PayPal and Ripple Labs partnership, that would send everyone to the moon. But no, I think they're building a lot of things on Ethereum right now, PayPal USD. So I don't think that they will try to redesign that. I'm sure they're just going to continue to build on top of what they already have. Are you ready? Payush donating PayPal to the community fund. Payush, absolutely. I'll be very happy to hold PayPal. At least it's a name that I know. I'm not actually a shareholder in my own portfolio. So am I ready? No, I'm not. But, well, I am now for $10 worth. So thank you. I'll make sure to buy that tonight, and the order will go through tomorrow. Open to $1. Yeah, you know what? I wasn't looking at open, and sort of what happened with GameStop is that you had somebody that really did have a case for GameStop being undervalued at the time that he put out his original thesis. Okay, Roaring Kitty. And then it became such a meme and got absolutely huge, and the volumes just took it into meme territory. But I bet to some degree, if you go back a month and you stare at Open Door at like 50 something cents, what was it at the lows here? 50 cents sort of in this sort of area. I bet you there is a case to say that probably was undervalued to some degree, right? If you just have continuous selling over the last, even longer than this, like 2+ years of just bringing this company down and down and down and down, that there is a potential case to say that there is a buying opportunity here at, 50 cents. And potentially they were hoping to get somewhere up to 80 cents, 90 cents, $1, something like that. That's an amazing trade. That's a double. Were they expecting meme sort of short squeeze mania to bring it up to, $5 per share? Who knows? But so the idea that the commenter here, Commando Master, said Open Door to $1. I mean, yeah, that there was probably a case to say that it was oversold at that time. Evan said that he bought rocket companies. I actually think that is a better buy. What's funny is they are in the mortgage game, but I'd actually say they're more asset light than actually acquiring houses and flipping houses. I'd be much more willing to hold a company that is in the mortgage game, which is a tried and true area, doing it in a new fintech way, also getting into bank accounts and all of these other things, and also has the house buying attachment. What is it? Redfin, Zillow? I forget which one they ended up acquiring. I think it was Redfin. I don't look into them too often, but I probably should. Doogie Pie said Japan deal. What Japan deal are you referring to? Redfin. Okay, cool. We should all invest in a data center. Chat invested private Tanner's. The Tanner data center. No, but guys, honestly, just going back to what the original title of the video was, and we can continue to talk about more of what Elon said. I mean, we only touched on a quarter of the things that he ended up posting today. But the demand for artificial intelligence continues to grow. I have no reason, just like I did 2 years ago, to believe that the progress that they're making in artificial intelligence is going to stop. You're seeing Google attracting top talent away from some massive other big tech names, but also like Windsurf. I mean, they're spending so much money to acquire talent right now. Meta, we all know what's happening there. They are spending $100 million, $200 million, $400 million pay packages, rumored that they are acquiring top talent from OpenAI, from Google DeepMind, from all of these things. It just came out today. Microsoft is now also doing the exact same thing, going heavily into poaching users from Google DeepMind, people that have been there for, 16 years, 18 years of experience at Google DeepMind. All of these people that helped work on products like Gemini and products that are artificial intelligence based at Google. And they're poaching these high users away from Google over to Microsoft to help work on consumer-oriented co-pilot assistants. Okay? The race is on. Capital expenditures will rise. If you're spending that much on talent, you also need the actual hardware in order to further the progress, the research, and the tools that are being designed. I mean, it's insane what's happening in these types of markets. We're in a full-on frenzy. And there's one company, well, there's a few companies, but in my opinion, the company that I continue to hold on, Nvidia, will be used across all of them. Microsoft is an unbelievably large buyer. Google, Facebook, all of these companies, insanely large buyers of Nvidia chips. And now they're all talking about 4-5 gigawatt data centers that are, 20 plus kilometers long, stuffing them full of Nvidia products that are not, $10 billion orders, not 20, but hundreds of billions of dollars worth of orders that have to be built out over many years. Okay. This is unbelievable. It's an unbelievable turn of events from what it was, a smaller GPU company that I was buying back whenever I was, buying a computer, and I'd rather buy a simple Nvidia chip rather than a complicated overclocking chip, which was the Nvidia or the AMD chips at the time. So I was really interested in Nvidia because it was what I always used, like Nvidia GeForce, and then ended up turning that into seeing an opportunity for Bitcoin mining, because at the time it was really heavily GPU based. But Nvidia actually saw that as a less of a opportunity to make chips specifically for Bitcoin mining, and actually put it more towards data center usage and bigger projects like AI factories, which has proven out to be the absolute right case. So now people think that there's going to be specialized chips that come out that just dominate the space in data centers, but it really is the only large customer that Nvidia has to build for. So it's in my opinion that they are going to crack that code and continue to put out the best chips possible, because that's what 90+% of their revenue is dependent on. So everyone's talking about how, new chip designers are catching up to the H20s. New chip designers are catching up to the H100s, potentially the B200s. Let alone the, GB300s and the MVL72s that they're building on top of that, or even the Vera Rubins or the Vera Feynmans. I mean, there's so many leagues to this game. Nvidia is so far ahead. It's incredible. And the consumers are very happy to buy at top dollar. And in fact, they're willing to pay extra if they can get those orders expedited to them first, because they are so desperate to win that race. And if you don't think that they are, why are they paying hundreds of millions of dollars per employee? Why? So, and by the way, that's just a few of the large tech names, right? I can add on once again, think about what China's doing. Think about what the rest of the world is doing: sovereign AI, robotics, robotaxi, drones, full-on defense, smart cities, all of these things in every single industry. We're not even talking about enterprise or, however other many different sectors that I could name off in healthcare and all of these things that, trust me, Nvidia is full focused on to increase their total sales there as well. CUDA dominance cannot continue indefinitely. I don't think so. I agree with you. It doesn't need to be indefinitely, but there's no signs yet, and I don't see a slowing. So we monitor those, the trends in their dominance, and we try to keep up with it. But the amount of data that they're actually taking on, the market shares that they're taking on, I mean, doesn't look like it needs to slow down right now. Nvidia will get gut checked. I mean, hasn't happened so far, ladies and gentlemen. We've known for a long time that this is going to be a multi-trillion-dollar industry. And that's sort of the thing that I think Tom Lee has highlighted so much, is like, this V-shaped recovery must be the most hated one in history. Like, people watch Nvidia go up and they're so desperate to see how this company is going to crack, rather than just looking at the bull case ahead of it, right? Let's imagine that they lose in market share, but they can continue to grow over time. What are those growth rates going to look like? And that just gets me so excited. The market cap is so, sorry, the total addressable market is so large that they don't need to be the only player to win. Okay? This will be the first $5 trillion company. And it could be very, very soon. I actually think it'll be the first $10 trillion company, but that'll be a little bit later. I'm not calling for that to happen anytime soon. Speaking of which, I actually just tweeted this out earlier today. If you guys aren't following me on X, please hook a brother up. Elon Musk is seeking up to $12 billion more for XAI just weeks after raising $10 billion to buy more Nvidia chips for its next large data center. Like I said, just as I re-described to you, the market is seeking for reasons to doubt it, but we just keep seeing larger orders and a need for the biggest customers to stay in the AI race. And, we'll see. XAI is burning cash rapidly. We'll need to see for them to find, new ways to end up making sure that this is actually a profitable venture eventually. But we're seeing, new products that come out that are $300 a month, $50 a month. I actually just recently ended up changing from just being a premium subscriber to a premium plus subscriber. So now they're getting me for, $50 a month or whatever it is. So yeah, I mean, they're getting more revenue from me. I'm sure that's going to be the same across Gemini and ChatGPT, for which I happen to pay for like a lot of those services now. And I sort of rotate out to make sure that I'm trying all the new ones and everything. But they're only going to get more useful with time. We're scraping agentic artificial intelligence right now. That's going to boost up revenues and token production for every single one of these large LLM companies. And then just like crypto, you're going to have all these L2s that are built on top of them that will try to go out and make more money. Um, 3 minutes ago, hold on a second here. Huge, and I mean huge, trade win with Japan. Japan will invest $550 billion into the U.S. economy, open its doors to U.S. autos and Japanese goods, and will face Japanese goods will face 15% reciprocal tariffs. Let's see here. From the words of Donald J. Trump, we just completed a massive deal with Japan, perhaps the largest deal ever made. Japan will invest, at my direction, $550 billion into the United States, which will receive 90% of the profits. This deal will create hundreds of thousands of jobs. They will There has never been anything like it. Perhaps most importantly, Japan will open their country to trade, including cars and trucks, rice and certain other agricultural products, and other things. Japan will pay reciprocal tariffs to the United States of 15%. This is a very exciting time for the United States of America, and especially for the fact that we continue to always have a great relationship with the country of Japan. Thank you for attention. Thank you for your attention in this matter. Wow. Wow, wow, wow. Markets are going to be stoked. I already said that, Tanner. My bad. My bad. Japan will open their country to trade, including cars, trucks, and rice. Yeah. I didn't see Dookie Pie. I got to trust you more often. Someone just said Japan deal. I didn't know what you were talking about. We were talking about like Nvidia. I was thinking like sovereign AI or something like this. Japan needs Nvidia chips too. Yeah. Yep. 100%. Welcome to the Dookie Pie show. It really is. It really is. It's Dookie Pie and then me. And then, yeah. But I have a boss. Yeah, sorry, that took me off from my thought process before. That's very exciting. I mean, honestly, hopefully the markets end up turning around tomorrow on that news. But we will see. I love whenever the trade deals come in, especially as a shareholder for companies like Nvidia, because they always are part of those deals. And yeah, I was going to say as well. Someone said that we need more waifus, but what was I going to say? Oh yeah, that's one thing that I think was so worrisome about Nvidia, and that's just getting more cleared up from management right now, is just the not like cracking down on Nvidia chips and not using them so much as a heavy political pawn, or at least using them, but also using them to actually close deals and not be restrictive and not stop them from selling to China. So happy that that's cleared up. Happy that they are actually being very deregulative in nature and opening up cryptocurrency and all of these things that I thought were hopeful promises during Trump's administration, but now we're actually seeing some real follow through with that, which I think is very exciting. Now, if only all this Epstein news and file stuff would get cleared up, I mean, I think we'd actually be in a pretty good place right now. You know, it's been pretty great. Markets have reacted very well after the initial shock from Liberation Day, and happy shareholder of American stocks. And, you know, that's another thing too, by the way. We're talking about Elon Musk a lot for XAI, but what do you guys think about Tesla right now? Is he actually sort of closing up shop with this America Party thing? Do you think he's going to do that, or do you think he's just full focused on the companies that he's actually working in today? Because I want to be a Tesla shareholder. I mean, very much so. I want to be a part of a company that, one, has the guts to go out and buy insane levels of chips to set up data centers, and is always, you know, forward looking on their companies, and puts out amazing products, and has the guts to end up talking about the next products that they're going to be going after, which is humanoid robotics. I mean, it's all very exciting, but it's also a very expensive valuation and comes with political risk. So, yeah, that's the thing that I sort of have a problem with. By the way, Elon did continue to post about not just the superclusters that they're setting up like Colossus 2, but that the fact that they're getting in the first batch of 550,000 GB200s and GB300s, which are their new Blackwell Ultras, but that's going to go online in a few weeks. Okay, this is unbelievable. The size of this is just incredible. If there ever is some sort of Tesla XAI acquisition, something along these lines, merger, boy, oh boy, would that be a very exciting business. That would be very, very exciting. There was another thing that he ended up posting about the cable setups and everything, just getting people more excited. So he's definitely at these data centers today and making sure that, you know, setup is going well and everything, just showing off all the cable management here, which is just insane. Like just the levels that are needed here, all liquid cooled. A lot of the networking also, according to SemiAnalysis, was done from Nvidia as well, because they are just the perfect partner that you'd look for. Is Elon pumping the stock a little bit? He might be by saying he's going into sort of wartime CEO mode, sleeping in the office 7 times a day. He said that like a month ago or so as well, and nothing really changed. He went back to talking about America Party and everything. So, yeah. Tanner, I'm trying to get into one of those data centers for content. Would you like to come? I think I'd like to check that out. Yeah, that'd be really interesting. Evan, if you can, you know, find out if that's a possibility, that would be pretty crazy. I wouldn't know what the heck I'm looking at, but I'd be interested to learn, especially if we can get someone to walk alongside us and explain what the heck's going on. I think that would make for some pretty great content. Let's see. Isn't light and fiber the new copper cable? A lot of the times it can be. It depends on the distances and the energy efficiency for those types of things. But yes, it is. Photonic systems are much more, or they're much faster than copper cables traditionally. JJ with the $10 donation. Thank you, my friend. JJ, just so you're aware, any donation over $10, I will buy whatever stock you want with that money, but for my own portfolio, obviously, but just as a fun way to track a sort of community fund. If you're interested, let me know what stock you want me to buy with that $10, and I will, I'll set that up tonight. We have, I think, like nearly 70 positions in the community fund. I think what we're going to do, like a normal, you know, sort of fund or something like this, is that we will have like a quarterly video. That's what I think will be fun. We'll talk about rebalance during the video. We'll do like a live stream every quarter and just see how things are going. So we were actually doing all right for a little bit, climbing up, not as fast as the S&P 500. Then SBET was so heavily in our portfolio, so that actually brought us down quite a lot. But I'm actually not worried about that. I think these are small-term dips, maybe not the most optimal time to purchase, but the overall opportunity that SBET has right now in terms of the amount of utilization for Ethereum could be spiking up, like, I mean, by 10, 15x, okay? That I think SBET's actually well placed in our portfolio. But yeah, still down very much. If we look at the total, I think it's down 26%. SoFi's up. Abcelera is up 16%. ASTS is up 25%. And like a future investing, you know, in future investing nature, Joby's up 43%. These are all the names. Now getting to 67 or 66 once you reduce the take away the cash. But I just have to have cash in there so then I actually can purchase those positions. What did JJ say? My current YOLO is TSSI, so grab a share. It doesn't have to be your YOLO, okay? We could pick regular stocks. We could just pick, like, you know, things that we like, but I will do TSSI as long as it's over $1 billion. I know nothing about it except for what I know that, TSSI won't work. $600 million market cap. KLA Corporation, $118 billion. Nice. Holy. I'm very happy holding that. Bag H20. Thank you so much, my friend. I really do appreciate the donation. I'll make sure to add that today. What did JJ say for his next stock? We have to change out the TSSI. You're up on your Honeywell, right? Let's take a look. We were able to get shares of Honeywell at Yep, we're up on our Honeywell by 0.58%. Look at you go, eh, Evan? Evan's setting us straight. I mean, as long as we're up, you know? Nadia with actually, a pick that I would love to buy, especially at these prices. What are we at right now? 1279. Holy crap. Honestly, what I've noticed about buying and selling Nubank over my time is that there's extreme periods of consolidation, but that's fine. We're not seeing any degradation in the actual quality of the business. So Nadia, thank you so much for the donation. I'll very happily buy Nubank. If I could, I would double down on that. Can we see the chart? Is SBET dying again? Yeah, you didn't see it? Here. Looks like this right now. Total return, we're down 26%, but today was actually a good recovery, up 8.5%. And like I said, I actually think things will recover. But yeah, only started in July 8th. So, we're doing all right. We're doing all right. I think a lot of people are putting... this is the part that I think is the problem, or what will go wrong with this community fund, is that everyone is giving sort of their YOLO picks or their most out there picks. So even the people that might, their portfolios are built up of Google and Amazon and Tesla, Nvidia, all of these great picks, maybe they have a slight position in something like, Clove or, I don't know, BBAI or whatever. And those are the picks that they want to highlight, which I also think is fun. It helps me learn about some of these names that I know nothing about, but that's important. Did you see Donut and After Hours? I remember what's it called? Yeah, I think Amit talked about this today, up 26% today, and even high. Oh my gosh. In After Hours ran even further, up 69%. That's crazy. It's a short squeeze meme play once again. Wow. We're in that type of market. And honestly, I think probably the most efficient way that I can play this, because I'm not going to get involved with companies that I can't sleep well at night. And so Robinhood seems to be the name that benefits off the mania. Okay. This is just like the crypto plays, and why I liked Coinbase and these sort of names so much, like the brokerages, is that the volatility could be like this, but as it's going up and down, Coinbase's revenue is going one direction. It just continues to climb. It's just a matter of how fast it climbs based on how much trading activity is actually getting done and the market share of how much is going towards Coinbase. So Robinhood is definitely the name. Unfortunately, Evan, I cannot add Robin. Hashtag ad. I can't add Robin. I can add Hood, but I check the description. No levered ETFs or no inverse ETFs. But that's the 2x leveraged Robinhood play. So let me know what else that you would like, but I can't do levered ETFs or inverse ETFs. Let me make sure I screenshot that as well. We can do Hood. No, more Honeywell. Okay. All right, that sounds good. More Honeywell. Okay, what did JJ end up saying? Okay, other end of the spectrum, buy another share of PayPal and suffer with me. Sounds good, JJ. I don't know if I'll get a full share, but I think we got that's the second PayPal order. Yeah, so we will see, ladies and gentlemen. Okay, let's see what else has happened today that I thought was super interesting. Let's talk about a little bit of Google, shall we? Essentially, Google is going to be showing off earnings very soon. And there were some things that have been happening that I also think that maybe we should highlight. For example, $20 million worth of Google 210 calls today. Earnings are on after the close tomorrow. Yeah. Tomorrow's going to be a massive earnings day, especially for me. We'll be live tomorrow for a long period of time. We have Tesla earnings, Google earnings, ServiceNow, Chipotle, IBM, T-Mobile, but mainly just the first three that I'll be covering: Tesla, Google, ServiceNow. If we even get around to that many, it depends. It's funny now, like looking at this, like because of your guys' donations, like how many of these businesses that we actually hold, like should we do QuantumScape and these sort of names that we do have in the community fund? But yeah, if we take a look here on Earnings Hub, we can see that Tesla, for example, tomorrow, Q2, we are expecting $22.25 billion in revenue and 35 cents of EPS, which is going to be large negatives year over year. Now, what could happen worse than that, if you've seen in the last 3 quarters, especially on revenue here, and I could make this bigger for you guys as well, but that we've missed, or Tesla has missed on earnings. And Q1 was the straw that broke the camel's back for me. Like I said, I want to be invested with the entrepreneur in our lifetime that has been able to have, 5 billion plus businesses running all at the same time in all futuristic aspects. Like, I mean, we're future investing after all. Like Tesla fits right into that. But you cannot be missing earnings by this large of a margin. Okay? It can't happen. And if it does happen, there better be a valuation that reflects that sort of miss. Okay. What every Tesla investor I feel like is doing is discounting the losses today to say, oh, but Robotaxi will take over. But a big part of what Robotaxi is doing is saying, hey, the size of the fleet is going to become autonomous. But the amount of sales that we get today determines how large the autonomous fleet will be into the future. So if there was going to be no misses, and like what we saw in 2020, 2021, where, the growth rates were skyrocketing and people had no political conflictions with Elon Musk, then I think what we would see today is even higher predictions for Robotaxi, because the amount of vehicles on the road would be even multiplied from where it is today. So the misses today, I still think, are unacceptable. Yes, I'm excited about the future, but I'm not pleased with where the company is going. And then to top it all off, paying for 150 times earnings today is crazy. People get very excited about, the restaurant business and all of this stuff after they've opened up one diner. I mean, this is a $1.1 trillion business. I'm not worried about the couple of restaurants that they're planning on doing at key locations. I think that's fun, but I actually don't even think that it should be, like, the numbers shouldn't even be looked at. If we're going to be betting on Robotaxi and Optimus, let's keep our eyes focused on Robotaxi and Optimus. Let's not get distracted. Yeah. I hope to have more Tesla, but I need a good price. I'm so excited for Google earnings tomorrow, though. On second, like going off. I actually think that although earnings expectations for Google's revenue is actually slightly decreased from the quarter before, I think there will be a beat, and I actually think there's a possibility to pass 90 billion in revenue. We're just seeing such amazing data coming out of Google, especially for Google Cloud and YouTube. Waymo's doing well. It's not contributing a lot right now, but it will contribute to the price of the stock and the multiple. Just a very happy camper for holding the company now. And it's funny how much I've gone 180, and yet the market has gone the opposite way of the way that I've thought about the business. Kendall Kitchen says, add NerdWallet. Wow. That is an interesting name. I knew that they were a public business, but don't follow them. However, I just realized at their current price today, we cannot buy them. We would have been able to purchase them before, but they've fallen a little bit, which actually puts them at an $800 million market cap. So we have a rule on here. 1 billion is the minimum market cap. Kendall, what is another stock that you would like me to put into it? But potentially keep an eye on the name. If it does go over $1 billion, maybe we can do something in terms of like rotating out into NerdWallet at a higher valuation, which I know sounds like not the move, but these are the objectives of the portfolio. I'm going to stick with them. No changes. Google will go back to 180. What's Google at today? Or what did it end at? Google ended the day at 192. Dookie, why are you anti-Google? And holy crap, the great and powerful micro to macro. Ladies and gentlemen, honestly, very early on in my YouTube days, I met this great man. He's also a streamer, YouTuber. Please go check him out. But Jesse and I have been good friends throughout this journey, and awesome to see him in chat because I haven't seen him in a while. Jesse, if you don't know this man, with that $50 donation, I'm going to buy whatever stock. Now, remember, I know the way that you invest. This will be a year-long hold, okay? For you, maybe I'll make an exception. You can tell me when to sell it or something. But every donation on this channel goes towards people's favorite stocks. So we're building a community portfolio. Jesse might pick SBET. I know that he's very, very heavy into a lot of the crypto names. Could be a crypto miner. I'm not sure. Hopefully he's still here, though. Thank you, Jesse, for the kind donation. Let's also make sure that we see what Kendall wanted as well. I don't see anything from Kendall. Someone let me know. If I miss it, that remind me in chat. Let's see. And if Jesse doesn't get back to me, I'm going to hit him up on X. By the way, dude, like, congratulations on your dream home. Jesse has worked so unbelievably hard. The bets that he's made, putting his capital at risk, has actually benefited his family. And it's just one of those really exceptional cases where you get to watch somebody, like, obviously Jesse was doing well even before that, but watching him over time has been unbelievable. And yeah, his kids are very lucky to have a father that has done so well in life and put them in an awesome area to succeed in life. So Jesse, great father, great person, big fan of his. So I can't give enough praise. Jesse told me he wants you to buy more Honeywell. Yeah, I know, I cannot believe that for a second. If it's not a name tied to some sort of artificial intelligence or crypto, he's very forward-looking. I think that's what it'll be mainly about, but we'll see. And maybe he doesn't want me to pick anything. Maybe he doesn't want to. Maybe he's just donating to donate. But I hope that he picks something because I like following it. Both want Grinder. Yeah. I don't. What is like? Is Grindr just the joke, or is there any sort of bull case at all? Yeah, because I don't know why Amit got excited about that company in the first place. I know there's going to be a lot of jokes, but he likes Metaplanet. I do know he likes Metaplanet. I'm fully aware of, but does he want it for me 12 months out? He definitely made, I think, a fortune on Metaplanet. That's for sure. Inside joke, but yeah, wasn't he actually into the company overall? And it got me into Bumble. What I never understood the dating app stuff. I also thought that like, and this is from somebody who hasn't been on a dating app in like 8 years. That like, I thought the apps are starting to like die. That kids are not using them as much. Not kids. I guess anyone can use it, but like, mid is a power use. Um, but Bumble sucks. I don't follow any of them. My understanding is that their usage has actually gone down. Like a lot of these dating apps, like just overall. I've not been following them too heavily though. I probably do need to find some more. Well, you know what's so funny is I think that people want me to find more smaller cap names, but I've never actually needed. I actually find that my use case or what I really like looking into is companies that are about 20 to 50 billion dollars at the time. Lately, it's actually climbed a lot more. The companies that I'm looking at with market caps have actually been much higher. And I feel like retail has actually started to rotate away from those names and go more towards the 1 to maybe $10 billion range, if not less, to try to chase what could be the next large opportunity. And there will be absolute winners out of those next names. But I don't know. Maybe it's coming with my age. I don't know what it is, but I'm trying to preserve a little bit of what I have and trying to find names that will compound them quickly, but being very diligent that there are risks that companies do lose. And the one thing I would absolutely hate is to pick a company that goes straight to zero. That the last thing I want to do is pick another name that goes down 90% or something like this. Because I have my names that have gone down 90%. Doesn't feel like that'll ever happen during, like what we're seeing in 2025. But just like what we saw in 2021, you're going to see a whole wave of these companies that just simply can't find a customer that's going to pay them enough to keep the company alive. Tanner, out of Costco or United Healthcare, which one would you pick and why? This is me trusting other investors. Obviously, I understand the Costco case a lot more than United Healthcare, but I think that the valuation on Costco is a little extended. So I would trust better investors than myself to put it in UNH. It wouldn't be as good of a sleep, but the truth is I just wouldn't invest in either one. Costco is too expensive, in my opinion. I don't want a company that's growing in single digits, even if it's the stickiest user on earth. It's just a little too expensive, or it's just a little too slow for how, how expensive the company actually is. But I'm a power Costco user, and yeah, but there is valuation's a real thing. I love the wieners at Costco. Yeah, but that's a loss leader product for them. So every time you go and get a hot dog at Costco, it's costing you shareholders those big dollar bills. Obviously, if it was costing them all that much, they wouldn't do it. It's clearly working. People show up for the hot dog. Maybe they need to go and get that other item, maybe an article of clothing. Maybe they browse around a little bit. It works out in the end, I promise. But Canadians love Costco. It's weird. Maybe it's a lack of selection here. But What, Americans don't like Costco? You know? But yeah, I'm a Canadian. I love me some Costco. Uh, okay. Tanner, so grateful for your channel. Kelly, so grateful for you to be here. I'm grateful for my channel. This has been, one of the greatest decisions of my life is take something that I haven't really been able to talk with friends and family because they're so done talking about stocks. They want to talk about the things that are actually going on around them. And I've been so heavily invested into markets. So I find that's also what I love about the internet is just it cultivates all of these extreme, like, I in the way that I love the stock market, like in terms of doing late night shows on a Friday night to talk about stocks and everything. I found other extreme, I was going to say extremists. I mean, we are extremists, but that name has been maybe overused for terrible reasons. We are extremists in good ways. And it's just great that we've all come together to talk about names, try to find the next, Nubank or Mercado Libre or Nvidia or Meta, Google, all of these names that I love talking about. And I'm so happy that you guys can show up to share in that sort of love of the game, and we all sort of profit on each other's ideas. I know a lot of people think that this is a zero sum game. But I mean, the only thing that I would say against this not being a zero sum game, the high majority of the money that are in markets is actually dividends. So, like companies add in via buybacks and dividends into markets, so much so that a lot of the new money and the gains that are made are based on the companies, not the investors. But another thing on top of that is that retail themselves kind of acts in a quasi fund. We work with each other's trades. We try new things, and in that sort of way, I do hope that that we do benefit and we see outsized gains, and that the people that I talk with and associate with, Roy, Amit, Steve, Chris, all of these different guys, Matt Money, right? That we try to elevate and beat the S&P 500 and learn from each other. Which is not what I expected whenever I got into YouTube in the first place. I thought I was just going to upload videos and this was going to be more of a quiet experience. And I was talking about more of the YouTube game, but yes, Evan, Brad, all of the X guys as well. I do learn a lot from them as well. Plus, I mean, if there's any news source on X that you need, if you needed like one account, it would just be Evan and Evan alone. So yeah. But yeah, the fact that I have a bunch of other smart investors that I can bounce ideas off and everything was not something that I expected from this journey. And I mean, it had to have accounted for a lot of additional gains, not only to calm nerves, but to get new ideas, look into other names. Roy just sent me a ticker the other day and he goes, "Oh, I'm really starting to look into this name." It was a name that I've seen previously and I've just completely discounted and, wrote it off. But the fact that Roy says it's legit means that I'm going to triple check it. So that's very important. It doesn't mean that I buy because he tells me to as well, which sometimes I feel like you guys might do from time to time. But really, if someone tells you to look into a name, that's all that means. Do your own due diligence. Trust your gut, because if you're only going off someone else's information, if something goes wrong with that name, you'll have no conviction to stay with it because you don't know the name at all. So make sure you do your own due diligence so then you understand whenever a company goes down that you don't freak out because potentially the news might be a little overblown. Drink some water, Tanner. Thank you. Just a daily drink water text. Maybe we should get more of those. Just every now and then, if I haven't taken a sip in 5 minutes, I need another text. Or was it because I was drinking coffee? For all the times that I've crapped on Tim Hortons, look at me. QXO looks stable. We have it in the community fund. I think, does the Japan deal mean that markets moon tomorrow? Potentially not. Do I think that it is positive for markets going forward? Yes. Yeah, I do think, but like, what's going to happen into the markets in the short term? I don't know. If Jesse doesn't pick a stock, can I? No. I'm going to reach out to Jesse. We'll make sure that we get it on the books. I used to work at Timmy's when I was a teen. It's disgusting. I don't like it either. I have a Tim Hortons and a McDonald's really close to my house, and the McDonald's is like, I feel like I'm going to dox myself. So I've said enough, actually. I've said enough. Yeah, I got Tim Hortons today. Do you use spreadsheets in your investment strategy? Jay, very, very, very much so. So much so that I have like videos on how to use spreadsheets. But yeah. You drink bad coffee? No, I drink quick coffee. I drink coffee like, I don't know. I've never cared about this. I got like this morning. Okay. It's cold. I just don't, I'm using it for the caffeine. I'm not a complainer. I get the caffeine in, you know, that's it. No, I don't drink. That's the one I don't. I actually can't stand it at all. But I do just go to a drive-through and get a coffee as quick as I can. They're saying I drink bad coffee. No, I go to Tim's or I go to Starbucks, whatever is just nearby, which happens to be McDonald's or Tim Hortons, not because those are my favorite coffees. However, I do think McDonald's is an unbelievable coffee. And like, if I would be bullish on McDonald's for any reason, it would not actually be their food, for which I only eat there. If you guys are a McDonald's employee, you might love me, but you'd hate to hear my order because it's just burger patties. It's the only thing I can eat there is just quarter patties. So that and a coffee is me all day. Yeah. This is a finance page. Okay, so this is a finance page. I am bearish on McDonald's and junk food. I think that junk food will go down over time. I'm very bullish on health food, fitness, stuff like this. And I don't think I have a lot of investments that actually tie around that, but I do think that health is going to continue to be come more in vogue, like popular, and junk food will continue to go away. Now, if I do go through McDonald's, it's usually for a black coffee, which I don't actually think affects my health in a negative way. Make your coffee at home. That part I don't care about as much. I'm not like I try to do those types of things, but sometimes it just bothers me. Like the amount I eat out is pretty crazy. Not a very good penny pincher in that way. I don't buy a lot of luxuries, but I do have a pretty healthy budget on Uber Eats and these types of things. So might be also why I'm very positive on Uber is because I spend like 20 grand a year on them. So, still healthy on Uber's bull case there. Yeah, I have Uber. Yeah, I have to have Uber One. Have to. I tried to cancel it recently, and that was a absolute disaster. But yeah. Okay, let's see what else. Dude, like I'm not best way to get free coffee. Do you guys know about coffee? Coffee's like $1. It's the like cheapest thing ever. I'm not going to my local car dealer. You get free coffee. It's $1. Yeah, they're getting sued for that. I know, but I actually tried it for my own like I tried it out because whenever you actually get the payment is whenever you remember that it's a problem. And you're like, "Oh, I'm not using that right now. Let me go ahead and cancel that." And then you're like, "Oh, you can't do anything for 48 hours." That's great. So then it just is long enough for me to forget about it because it's like $5. I don't care that much. It's just if I'm not using it, I don't want it. Um GTLB GitLab. And we can do GitLab for sure. Very happy with GitLab in there. That'll be a fine one. Thank you, Kendall. I do appreciate it. And then whenever they hit 1 billion, we can swap out to NerdWallet. But you have to remind me in chat, and you don't have to donate to remind me. We'll just swap out. Tanner, any interest in quantum? No, not really. The only way that I've sort of hedged my quantum bet is just to be betting on Google. If they end up finding breakthroughs there, great. If Nvidia sort of helps in a sort of way, whether it's CUDA or if they plan on helping the design and creation of QPUs, QPUs, then I will play some sort of part in that game. But I'm not looking to invest in individual quantum names, especially right now, because some of them I find decently overextended. But that's just my opinion. I'm not trying to make a hard stance, yes or no. Okay, let's see. If someone figures out I think what they meant to say is that if someone figures out quantum, it's going to be Google. I think that's what Icewater here meant to say. Yes, there we go. If someone figures out quantum, it will be Google. I also agree. I think they're a very, very strong name here. Is Tanner Canadian? I am. You might hear it in the accent. I actually don't hear it at all. I hear other Canadians that might be you hear it especially in like Alberta speak or like Toronto speak, where you see some forms of accents come in. Supposedly, you guys can hear it from me. I feel like I speak normally, but I guess not, because I get it all the time where people just go, "Oh, wow, this guy doesn't have a Robinhood account." I can hear it in his voice. DY for the inset, passion, and humor. Thank you, Pedro. I do appreciate the support. I don't hear the accent much. A boot, yeah, a boot is the big one. People say I say car wrong and stuff like that. I don't find that's the case, but Starbucks Corporation with a venti caramel frappe. Payush, what did I say about let's invest in healthy businesses? You know what Starbucks is for real? Starbucks is grown up dessert. Like a venti caramel frappe. How much sugar is in that? You know, it's like Dairy Queen, just with caffeine in it. It's delicious. I get it, but to some people, this is what I'll say. I know this is not a health channel. I know none of you care, but I want to say it anyway. And you're stuck here, so treat it literally as a dessert. Okay, if you feel like you can ingest dessert right now, you've worked hard to deserve it. Have it. If you're drinking a venti caramel or a frappe daily as your coffee intake, don't. Or just know that you're doing it. Just be aware. Take the conscious self hit in terms of the sugar intake that you're actually doing. Am I a carnivore? No. I'd say the only sort of health decision that I'm making right now is that I'm trying not to consume wheat or sugars. I'm still consuming carbs like potatoes, rice, stuff like this, but I don't want wheat. I don't want sugars. Yeah. Tanner's acting like Uber One right now and not letting us leave. You're stuck here now. Black coffee, hard stop. I mean, I'm sure to some degree you can make it sweetened but also you don't really need caffeine. I don't know if there's too many health benefits. For me, it's just like it is a drug, right? Caffeine to some degree, it helps me work a little longer or stay a little bit more motivated for longer. I'd say that's probably the only addiction that I truly have in life is caffeine. It's just luckily not one that has too many health side effects, which is positive, I guess. But yeah. Um, do you have cold showers or saunas? I do both religiously. Um, I have a sauna, and yes, I do cold showers. Yeah. High metabolism is pseudoscience. I don't know anything about that actually. That would be the first time I've heard that. You're not addicted to stock. I'm addicted to stocks, ladies and gentlemen. I'm actually like, I can tell in my day-to-day life, I'm actually losing some level of like social, not social awareness, but just I'm becoming more introverted the more I am into stocks because it's like everything around me. I'll pick up a cup or something like this, and I'm just like, oh, they actually are a public company, or I know who supplies this product or something like. And it's just impossible. Honestly, my girlfriend's an absolute angel to even survive conversations with me, let alone to be with me for nearly 7 years now. I mean, it's insane. I must be the hardest person to deal with. Um, can we have another run of open, please? Sid, did you bought in? I assume. How many of you guys are one, or maybe we should do a poll so people don't even have to admit it. How many of you guys did buy Open Door and we're trying to chase that higher? And not saying that, it's not going to continue higher because it absolutely could. I mean, this could continue on for a longer period of time, but like how many of you guys did involve yourselves in the meme stock areas? No, absolutely not. Uh, heck no. I'm actually not seeing a yes. Nope, I don't gamble. I bought 9 contracts at 2. All right. Sid was the guy that brought up the thing to begin with, so that's not too bad. I, for one, wouldn't touch it. Now, I was so interested in Open Door before. Haven't really touched it since like originally looking into the business, but the idea of tackling such a large total addressable market does excite me. Just doesn't excite me as much whenever I find out how potentially low margins and how they were getting there and the homes that they were overpaying for and then how they were terribly fixing them up and the problems that they had with their contractors. I actually would venture a guess that company probably goes out of business just because I don't think that that's something that artificial intelligence and trying to look at real estate in a way that is so binary that it's a yes or no in terms of a purchase. I don't know. I just not a big fan of the business right now. I could be wrong. I could be wrong. Obviously, in the face of one of the largest meme stock names that has come out recently, is it the same divide between GameStop and what the rest of the market said? Because I would have said that was a dying, company that online video game sales has taken away their ability to sell in store. And then other people started taking that sort of spotlight and saying, hey, but they're going to be a, Bitcoin holding company and maybe they could turn it around, who knows? But Open Door, I if they continue on the trajectory that they're going in, it does not look positive. How about that? Anything can change. Um, Retail is greater than hedge funds. Yeah, but I don't even look at investing this way. Potentially, there is a case to say that there's an opportunity for a short squeeze, something along these lines. But then who gets out first? Like, because that was another thing where all of retail was talking during the GameStop mania about how they're all getting rich. But really, everyone was waiting for the first person to sell so then everyone could sell. And for everyone to sell, you need buyers at lower prices, or it drives the stock down. And essentially, people who thought that they were winning were no longer winning. And maybe half the people got out positively, some got out extremely positively, and many of the same retail GME holders were holding that same bag that people thought that, hedge funds were holding. So, open door about the whole idea that retail beats hedge funds. I think, just personally, the way that I invest is it's not about that at all. It's a bunch of different or individual entities that are trying to purchase a company, and the fundamental nature of that business going up or down will be the greatest driver of, volume. Maybe there might be a short squeeze in the short term, but you still have to be the 50% of retail that actually gets out scot-free, because you're not all going to get out scot-free. Oh, hedge funds are going to be our big volatility, or like our liquidity, and that'll be our exit liquidity. Good luck. They'll want to sell too. Remember, you don't lose anything if you don't sell. Oh, so true. So true. If you buy shares in a business and you have shares in that business, you still have shares at the end of the day. And that's fine, unless it gets delisted, in which, in that case, you could lose. But yeah, they could have a Carvana swing around and be perfectly fine. Who knows these days? I don't play earnings, but I have to roll covered calls past earnings. Gen X nurse, for which name? Joby and Archer, or what? Last comment you had was about Joby and Archer. If you do sell in a brokerage, it's tax deductible if you lose money. Yeah, you know what? It's a good financial decision to lose money. Come on now. Come on now. That's not a good reason. So, ladies and gentlemen, I'd like to highlight quickly. Let's go through a couple tech names really quick, and then, fintech names, and then we'll get back into the larger tech. But from growth to value, this is Chris. He's one of the good friends of the channel. I have big respect for Chris here. Melly, Mercado Libre. This is the Amazon. This is the, what do you want to call it? The Cash App, I don't know. They have a fintech, and they also have a Amazon level online e-commerce store. They also have credit and a bunch of other things, logistics brands behind it as well. Pretty interesting name. It's a stock that I've held for a long time. I am extremely bullish on this company. I'm surprised Ricardo Libre isn't in chat, who's a user that tells me to keep pumping this company. But today I actually am, because the stock trades at a 10.4 times enterprise value to gross profit, which is historically low. Since the 2022 crash, the stock has continued to trade within a band between 8 and 10.5 times gross profit. To me, that looks attractive, especially in a combination with 37% revenue growth. And I could not disagree, Chris. This is unbelievable. And although you can look at the stock and say, hey, you know what? This is an expensive company. We have to look at how much they're growing, what those margins are at, which are both expanding margins at fast growth rates and everything. They are an Argentinian business that's growing in Brazil and Mexico and all of these different areas. But, the actual stock is quite, well, one, impressive, they've traded very similarly to Amazon at almost a 2x beta to Amazon, or more like 2x to the upside. So as Amazon has gone up over the last 5 years, it looks like, Melly has done even, significantly better than that. And even over the last 10 plus years and everything, you can just look how much this company has just gone up and to the right. It's been insane. But more recently, you've been able to acquire this company. It's been essentially up and to the right, which has been a lot of fun. This has been where I've been doing a lot of my buying. But yeah, how can you not bet on the, demographic expansion of Latin America? Those people are becoming, well, one, much more affluent, in a really, really great age range. Average age in, Latin America and the regions that they play in, I think is like 33, something like this. They're getting cell phones. They're getting online now. They have disposable income. So Melly's looking very good from a demographic perspective. And then once you add on how cheap the stock is relative to how much they're actually making, not how much the stock price is, because we have to remember how fast they're growing. Amazon's trying to get in on this a little bit and try to break into their region, which you would think, oh my gosh, Amazon, how would you go up against Amazon? They've had an extremely hard time. Melly is an extremely sticky business. And it's been very, very favorable. What percentage of your portfolio do you have in Melly? I'd have to check, but it's not too much. It's definitely single digits. I don't know what percentage it is off the top of my head. If you bought in April, you're very happy. Yeah, I think I don't know. There's never been a great time to buy these types of companies. I always find that people can look at them as if they're more expensive because they continue to climb up in price. But essentially, as long as they continue to dominate, there's such a large user base there. Their financial services is growing like crazy. If you check out like, we could do this right now. I've not done this in an extremely long period of time, so I could be proven wrong right now. Okay. This could go wrong. I'm going to even the Brazilian app store here for, oh, actually, sorry. One sec. I don't want to go to the app store. I want to go to app store rankings, which is just slightly different. Top charts. Why can I not see top? Let's see here. Apple App Store rankings. Okay, there we go. I just have to change the thing from US to BR in here. So this is still the US chart, but if we change it to Brazil right now, this is the Brazilian one. So you're going to see a change in the language and everything. But if I just go off the logos here, yeah, if we actually change this, Mercado Pago is the second name in the Brazilian app rankings. Nubank is 8th. Okay. This is actually showing that Mercado Pago is actually staying quite high on the list of new fintechs. Plus, they have an entirely additional business whenever it comes to, online like e-commerce, the logistics, because they have all their planes and trucks and everything, just like Amazon, because they're learning from their bigger brother there to say, okay, well, how do we make a very efficient logistical business? Apple's App Store ranking. My bad. You're on YouTube featured, by the way. I don't even know what that means. Is that bad? I don't think I'm on the Discover page. I think that's for people with like millions of views. I don't even know what featured is. Am I silly? Like whenever I look at YouTube, I see like home, shorts, subscription, YouTube music, trending. Yeah, I'm definitely not on trending or anything along those lines. So like, what is YouTube featured? Can someone explain to me why GoPro is pumping? So I don't know why GoPro specifically is going up. But if I had to venture a guess, it would probably be because the stock mania is just completely here. That anyone is looking for names that have any amount of short interest. So you're going to see a bunch of these names that Wall Street bets points their sort of target at, and then the entire flood of investors ends up flocking towards those names. This is Open Door. This is GoPro. This is many of these types of names. I'm actually probably positive on the products that GoPro puts out, but in terms of where they were bringing this stock up to like, nearly $90 per share at one time. It's absolutely insane. Yeah, but the market cap's not very high, so they can push a company that's at $200 million. Before it was $100 million market cap. So to push it up 187%, that means, the market cap before was, friggin', what is that? 50 million, 60, 70 million? To push that up is no problem. You get together a group of a couple million investors to find, less than 100 million or just a little over $100 million. That's easy work. GoPro thinks they're winning a patent infringement issue. I mean, that could be the case, that like a catalyst on top of they don't really just point at names that just randomly and say, oh, this company is heavily, shorted. Usually they like to have some sort of catalyst to go along with it. So I probably believe this. What I like about this audience as well is I never would have ever found that out until Steve in chat here said that. Maybe I could double check that just to make sure, but I'll take your word for it. I'm not going to look into GoPro much further than that. Okay. SoFi just sent me $100,000 pre-qualified student loan offer. Noto's getting aggressive with these loans. So did they send you a $100,000 pre-qual, or they said up to 100,000? Because 100,000 is their max. And in fact, most personal loans that they end up signing are they're not often that large. I think their average personal loan is somewhere around 20 grand, 25 grand, something like that. But it does get as high as 100,000. But yeah, they honestly, what that really says to me, if they are offering you that, this is what I said before. Okay, the loan platform business for SoFi can get to a part that's so big, and we know that this is going to happen. Like, I have 100% certainty this is going to happen because we've already seen it play out with Upstart. I'm not saying it's going to happen, but it could. And this is how it would happen. You have two different things that happen at SoFi Technologies. One is members climb up, and those members have inherent needs. Okay, they've got student loans, they've got home loans, they've got personal loans. They have credit card debt that needs to go into personal loans. They have reasons that they need capital from SoFi. So that can generate, demand, and then SoFi needs to find a way to get supply to meet that demand. Okay, so they get a bank charter, they get more deposits. They have to figure it out. The loan platform business, what's so interesting about this and why it's been such an amazing ad for them in terms of a business is that they have gone to institutions and say, hey, give us capital, give us supply, and we will go out and find demand. Okay. So that leads me to believe that what Baba said here, that SoFi sending out $100,000 pre-qualified personal loans, is that they have too much supply. They have so much money, and they're saying, hey, we are going to go searching for people that need loans. That's a much better place to be. It means that customer acquisition cost usually climbs because they're getting desperate to find customers. But it also means that like you're probably going to see the highest level of revenue gain. You're probably going to see the highest level of new customer ads. It doesn't necessarily mean that it funnels all the way into net income, but it does mean that you're growing the member base extremely fast because you're doing more Facebook ads, more Google ads, more TV commercials, more all of these things to find more people to give that supply to. You need demand. The interesting thing about advertising is you're conjuring up demand, right? Hopefully, I get that through to people sometimes because it's a hard thing to think about sometimes because SoFi's never done that before. They've had the demand and had to find supply. This is the opposite. They have supply. They need to find demand. Very exciting time. And the reason why we know that's going to happen is because it's exactly what Upstart did. Whenever they had a ton of offers, that what they did was they just took so much money from the institutions, the banks that they got it from, and just poured it all into sales and marketing. Everywhere you looked, it was an Upstart commercial. So yeah. Need the demand, got the supply. Yeah, hopefully that's what happens. We'll know after Q2 about if Anthony Noto says something about where the loan platform is going. I mean, that's all we can do. Is New dead? Nubank's the opposite of dead. Nubank's very, very good. I'm very excited about where Nubank is headed. SoFi could have outstanding numbers, but they could still sell down under. Sorry, SoFi could have outstanding numbers, but still could sell down under $20 per share, like they've done in other reporting periods. Yeah, I mean, what was interesting about today, which I also thought was interesting, is that this has not been a large run-up like we've seen into earnings. These recent sell-offs have actually been quite healthy for earnings. Like going into earnings, having a little bit of a pullback recently has been nice. If we went in and we just continued to climb all the way into earnings, we're going in at 25. Yeah, I mean, there's a large, potential that we end up going down on earnings because expectations are set so high. We go in at like $20 a share, 21. It's much more comfortable seeing earnings that way. I don't care about what we've seen in the past. I mean, SoFi, I think, is being looked at from a much, much larger investor base today. So clearly, they will be like the trends could absolutely be broken this time around. Let me just switch out my camera battery because it's about to die. I got one right here, so give me one sec. I'm still here. It's just gonna cut out. Also, for the people that are camera experts, is it bad for me to just dislocate or disconnect the battery while the camera's still on? That must not be good, right? Okay, Blurry Tanner coming back. There we go. Hello. How are you? Talking to you like relatives that I haven't seen in a while. Hey, how are you? Yeah, no, good. Yeah, no, everything's great. Yeah. Sort of that Jerry Seinfeld, like, yeah, oh yeah. I don't know why people do that around like family that you just haven't seen in like a year. All right. Maybe that's just me, man. Okay, Mew Life saved me there. I thought I was alone. All the comments were talking about other things. Thank you. Heard the Canadian there. My bad. I'm up 117% on my biggest position, which is SoFi. Super not worried about it. Clutch, that's awesome to hear, my friend. I'm amazing that that people are up so much on a great name that can be held for long periods of time, Is it possible to miss on numbers, Tanner? So it depends on the numbers that we speak of. To miss on SoFi's numbers, I honestly can say no. There's one time where SoFi was expected to miss on numbers, and they came out to give preliminary results, saying essentially that hey, we're going to miss on earnings. They kind of threw the blame at the Biden administration. Hey, they pushed out the student loan moratorium. That changes our numbers because we were expecting student loans to come back by now because they said it would and that it was a final extension. And it turned out it wasn't. So, yeah. Because they didn't come out and give those types of numbers, I have 100% belief. I'll just say 99.9 for the YouTube gods to not like that's my version of knocking on wood here. Okay. But I'm very, very certain that they are going to pass their own statistics. Every channel check that I've been able to see has been like so in favor of SoFi. Every single one. The demand from other loan providers, like they're all stunning. In terms of what Wall Street is saying, it's a different story, but still they're so bearish. Like they're lower than what SoFi has on their upper bound guidance, which SoFi has cleared every single time as well. So I'm not too worried unless they've changed their predictions. Let me just see that really quick because there has been some upgrades like 14 to 21 and stuff like this. But we'll check that right now. And 6 cents of EPS. I'm at 7 cents right now in 804. Yeah, nothing's changed. EPS revisions the last 90 days, 7 up, 1 down. Who's the one revising it down? Can I speak to your manager, please? What are you possibly seeing? That was probably like Timothy Switzer or David Chiavrini on his way out and said, hey, you know what? Just before I go, let's just do a quick downgrade and we'll head off into the next because they actually left. I think David Chiavrini doesn't even cover SoFi anymore. He got moved. So yeah. Preliminary. Preliminary. Thank you guys. I feel like this is a Mitts channel where everyone has to tell them how to talk. Oh man. And a lot of the times that's me. Like yeah. Aurora Innovation. Tanner, take a look. Founders are interesting. I do need to take a look at the name. I don't know it very well, but I am a shareholder. $10 worth. It was donated to me, but still. Thoughts on XYZ, Adrian? I'm so sorry. I'm not. It's not that I'm a big, not a big fan, but management doesn't seem focused to me. And every position I've probably had in my entire life has always been given preferential treatment to the stocks that have extreme focus. Okay. Nvidia, extreme focus. Robinhood or SoFi or Shopify. Shopify, extreme focus. The one time where they like, what are the names of all these businesses now? I don't even remember. 8 River Logistics. What's it called? Somebody will help me. Whenever they wanted to get into their own logistics game, they acquired a company in order to do that. That took away from their focus, and they ended up selling that completely, and the stock has ran ever since. Amazing that they got more focused, and the markets rewarded them for having asset light, fast growth, free cash flow machine. Block is the opposite of focused. It's actually probably the most opposite company I could think of. At least at their level. There are some companies like Microsoft that have grown into such a level that they can be less focused. Holy crap. Alpha Cry says, Floki looking really strong here. Are you talking about like Floki, the meme coin? I appreciate the donation, but like, come on, brother. You're on the wrong stream. if that's what you're talking about, that or this is some AI name I don't follow. Yeah, definitely not. I think it's like the Floki. I mean, I'm sorry, but that is like the definition of not what I'm interested in. Appreciate the donation. Yeah, that's a pretty toppy comment. So if you want that put in the fund, I can't put cryptocurrencies in anything. It's only equities plus non like no leveraged ETFs, inverse ETFs. If there's a stock that you'd like me to invest with that, I do appreciate it. Or we will do that, but it has to be something above $1 billion market cap. Chart looks prime for a breakout. Not much of a chart guy. Yeah, maybe I am, no problem. No problem. Thank you, though. Appreciate the donation. Tanner, is SoFi your biggest position? No. It's in my top 5, but yeah, it's not my biggest position. Nvidia makes up for like half of my entire portfolio, and then 13 other names make up for everything else. Once you add in Shopify as well, that's a large bulk of my portfolio is in those two names. SoFi is very close, though. SoFi is very, very close. I didn't want it to be this way, ladies and gentlemen. We had, Tesla in there, which was my second largest position at the time. Like, these were very big positions for me. But honestly, the more I look back, I probably should have just had it all in Nvidia and none in Tesla, even though that ran up for a long time. I mean, Jensen was the way the whole time. You know how much money I lost on trimming names like Tesla and Nvidia on the way up? I mean, I'm still like, over the moon on how much money I've made. It's been life-changing on Tesla and Nvidia and Shopify and these sort of names. But you learn a lot of lessons along the way. And I don't even know how heavily I regret it because it's got me here and I'm very happy man over in general. But it is incredible. You don't want to trim your flowers to water your weeds. It's but hey, 27 years old, got a long road ahead. Hopefully, knock on wood. We take care of our health. We do our best, try to stay safe out here. But let's try to get our mistakes out early and continue to learn from them. And hopefully we learn together and maybe for the newer investors in chat that you guys don't make similar mistakes of buying into some of these meme coins or something like this or trying to chase gains. That usually only gets people hurt. Maybe you might make some money on them from time to time, but then you make bigger bets on others later into the cycle and then you end up getting burnt. Usually I would just try to stay away from those. It's funny, right? The legendary investors of the Peter Lynches and the Warren Buffetts and all of these old guard legendary investors tell you all of these rules. And it seems like we don't go back enough to recap the lessons that they've taught us. So I have sort of an investing checklist, and very few of those lessons have I entered myself. Mainly is from the greatest growth investors of our time, because there's been 100 years of people learning these lessons, and a lot of them are just the exact same thing with new companies, new technologies, but the same old lessons over and over. So yeah. Dang, Tanner, you lift, bro? I mean, yeah, 5 days a week. I don't think I look at very much on stream, but that's fine. We'll be watching the stream in 2035. Well, I hope so. I don't know what I'll be doing by then, but I do think that that's the part that I love about investing the most, is that, some of the best investors in the world are 97 years old. You know, it's a game that seems to, you get better at over time, and you learn lessons throughout time. And um, if there's any people out there that, are extremely young, I know that I've seen some 16-year-olds in chat before that are buying their first businesses early on in their investing careers. That's such an amazing place to be. I mean, let's imagine you just get to the average age of 86 or whatever. You have 70 years to learn this game, you know? 70 freaking years. That's an amazing compounding machine. Unbelievable. Dan, I'm not levered in any positions. I don't touch leverage. Yeah. A lot of generational wealth is going to enter the market in the next 5 years. I think that whenever people talk about the great wealth transfer, I think that it's longer than people suspect. I think it'll be decades, but overall, it is an insane tailwind for fintechs that we like to cover, like Robinhood, like SoFi. There's a heck load of money that will be flowing down into the pockets of millennials or potentially Gen Z. But I don't know if it'll all happen. Like, whenever people talk about these, it seems like the number changes on generational wealth transfer changes every time I read the article. Like, whenever I first read it, it was like 50 trillion, then it went to 60, 70, 80, $100 trillion great wealth transfer. It just keeps changing. But that will be flowing down to their children and or whatever, and those people will be yeah. As a fintech enjoyer, any thoughts on Wise? Big fan of Wise. I've got 5 cards in my wallet. I would consider myself a fintech advocate, and not just fintech for fintech stocks, but like a user. I would call myself a credit card enthusiast. You can see some of the cards. That's 3 cards right there, 2 cards there. If I get this camera out of the way, you'll see another one right there. There's a one below somewhere. So I've collected them. And that's a pretty hard task whenever you're in Canada, because there's no fintechs here. So I've been collecting them. And I've got 5 more in my wallet. 2 of them are Wise cards. Okay. So big fan of Wise as a user. It's a power user. Yeah. Love Wise as a fan of fintech. Let's see. The wealth transfer is a myth. Most old people in America will have their money spent on retirement homes, which prices are much higher now. Keep dreaming. I disagree. There's wealth transfer constantly. This has been happening forever. It's just the large amount will end up flowing lower or flowing down into younger people. But yeah, I disagree with that comment. I'm still using the great debt transfer. Yeah. You know what? Everyone talks about the great wealth transfer. Not enough people talk about the great debt transfer. So true. So true. Let's continue on with our talk a little bit here on fintech names, because Galileo actually put out a nice article on more than 90% of U.S. adults use debit, but most loyalty programs still reward credit spend. That leaves out younger debt adverse consumers and about 46 million Americans without credit history. This has been something that Galileo has been trying to focus on a lot lately is debit is becoming such a large portion of the market. You even had Alex Chris, the CEO of PayPal. If someone has data on spending in different countries, it would be Alex Chris. Okay. He said, young people just don't use credit cards. I've got a ton in my wallet. Okay. So don't loop me into these people. I've got great credit. Okay. I've been building. But Galileo wants to skate where the puck is going here. And they're aware that the younger generation is not taking on as much credit. So in order to potentially build on what on the debit rails, what is missing is rewards. Galileo has been heavily focused on this. And whenever you see things like Wyndham Hotels, which have like, the second most number of hotels in all of America, the fact that they have like 130 or 120 million rewards members, almost all of them entirely on their credit card side, but not on their debit card side, which just recently came out with SoFi. If there's 46 million Americans for them to tap into where they can collect, Wyndham Hotel rewards points by spending through a debit card, that's going to be better than your traditional bank debit card that offers you absolutely nothing. Okay. So it's definitely best to have that over anything. And I would still, I'm still a big believer that credit card rewards, points are still 10x higher. But still, if you're going to get something out of your debit card, it's better that than just giving your bank all that juicy interchange fees. If Galileo can then sell that idea to not just Wyndham Hotels, but many of the hospitality deals, for which, from what I'm hearing, is very large. The pipeline is full of hospitality names, and they've actually brought a lot of customers into production. These are not just, ideas. This is straight getting into production with these customers. Galileo could be the next big thing for debit spend in credit or in debit reward spend. So that's quite interesting. On top of that, for other fintech news, I also thought that this was quite interesting. We talked about Western Union recently as being one of the most heavily disrupted names in payments. I mean, one, they're slowly dying as it is. They've been the company that I think has some of the highest charges for remittances in global payments. But that's really where they still are. That's where all of their spend is in cross-border transfers. So the fact that they are now exploring stablecoin integrations just shows that even the old guard, now that the Genius Act is through, is looking to find ways to benefit their bottom line by integrating with cryptocurrency. That goes to benefit the rails that stablecoins are being built on, like Ethereum, potentially Solana, these sort of names. And if you are a bettor of, BMNR or SBET or something like this, you're hoping that the underlying asset that for which that, fund is purchasing, Ethereum, is going to be benefited by stablecoins and companies like Western Union, sort of the legacy cross-border payments companies are integrating with. So interesting, but yes, they are the blockbuster of finance. As Clutch says in chat. Let's see. Sol is the next mover. I hope so. I'm a big Sol investor. Google is positioning itself to become a dominant semiconductor player. Why is everyone overlooking this? Their TPUs will be massive once they figure out quantum efforts. I'm not worried about the quantum efforts that tap into that. I think we're confusing TPUs and quantum and thinking that they go anywhere towards each other. But yeah, I think the TPUs definitely have their use case, especially for internal use. But we'll have to wait and see if that makes any sort of reasonable, use in the overall semiconductor space. I mean, right now, Nvidia GPUs continue to be the large dominant place, and custom silicon is still not widely used. I'm a happy Google shareholder in hopes that something positive does happen from Google's Tensor chips, but I'm not banking my entire my entire stake in Google on TPUs being the big thing there. Tanner, will you be buying Figma IPO? No. I don't know much about Figma, but I feel like I don't get why people are super bearish on Adobe for the same reasons, or like because artificial intelligence will be, potentially eating into some of those use cases and making it easier for people to create those products on their own, but then not sort of putting that same sort of skepticism towards Figma. I find that hard. Obviously, artificial intelligence might not be there today, but can't it get there? I don't know. I'm not. I don't use Figma. I've never been in that space, in the design space, stuff like this. But to people who are, I mean, you could maybe see that there's not a single other company that even remotely competes with Figma, and you could see an opportunity there. I haven't really looked into it. Buy Figma. Circle has more than tripled for me. So, Randy, what you're suggesting is that IPOs just work. There might be a market for that, but it's not a guarantee. And if you're suggesting that Figma or Circle or anything close to each other in terms of valuation or anything, I mean, I don't know if we've looked at the S1. IPOs don't go out at the same valuation. This is determined by the investment banks and the companies that are selling those shares. So there's no real reason to believe that. In fact, there's actually information to believe that IPOs are not a great time to invest in companies. Maybe you'll see an initial pump, but then you have to sort of guess the top and be out before people that also potentially get in there. Maybe it's worked historically in the last like 4 or 5 names, but I don't think that's a good sample size. I'd rather go off large historical data, which actually proves that IPOs are probably not where people should invest in. Chime didn't do a circle. It moved up to 43 and then dropped back to the 30s. It did. Yeah. I also think because it had such clear comps, like Chime is a different story because you could just take their finances and then just like compare it to SoFi or Block or like there's names that you can put it towards. At least with Circle, it's sort of a one of one. Figma might be a one of one as well, but I don't know how heavily it'll be compared to the likes of Adobe and these sort of things in terms of a multiple perspective. Don't trade with your rent money. I mean, that's a good case as well. I think that's actually a more useful case. A lot of people say don't invest with money you can't or that you don't want to lose. If I lost everything that I was invested with, like I'd be in a completely different spot. I am fully invested. I cannot lose everything that I've invested. But in terms of don't trade what you can't lose, I think that that's a very fair opinion. You know? And honestly, what Zach here just says is the honest truth, is that betting on Figma because you bet on Circle, I don't know if that's the most realistic move, but I also can't go to someone like Jesse Dow, for example, who has made a fortune trading companies in ways that I would never understand, and tell him what he's doing is wrong. If it works for you, it works for you. For me, I can say from experience that that's not what I usually like to do. It's not how Warren Buffett's made his fortune. It's not how a lot of the legendary investors have made their fortunes. Meet Kevin said that XYZ is just for S&P 500 over hood. Is just for S&P 500 over hood. I was like, man, despite I'm not a hood. What do you mean said XYZ is just for S&P 500 over hood? Like more deserving? He's able to say that. I don't know if I agree, but that's what makes a market, right? We all have our own opinions. I just need to know why he keeps stockpiling Sirius XM. Yeah, I couldn't tell you. Couldn't tell you. Maybe he's not asking his grandchildren enough if they're using it. Yeah, I meant more deserving. I mean, to each his own. Clearly, he's right because it got in, but I'd like to see how many people were suggesting that block got in before it happened. Because I follow a lot of people that made their predictions for which companies are possibly going to get in, and I didn't see a single list that had block on it. I saw a lot of lists that said hood. You know? Um, most IPOs go up. Yeah. I don't like to bet that way because it always feels like the day that you want to start betting that way, that's when it all goes wrong. Doesn't it feel that way? There's a trend to things. You try joining in on the trend, and everyone says, you know what, we've had enough. Because there's more significant traders that are going off data that potentially, if you're trying this for the first time, you're a retail trader trying a new thing. I don't know. You probably have better luck just going to a casino. The only thing that historically has worked time after time is fundamental analysis. And whenever I look at the billionaire traders, meaning the ones that are so consistent over time, not one big trade, but constant large trades that get larger and larger over time. These guys are constantly fundamental investors, qualitative investors. You know, Warren Buffett said, hey, you know, why don't people copy your trades just one for one? They're public. Why don't they do it? And he said, because people hate getting rich slowly. No one wants to get rich slowly. I'm fine with getting rich slowly. The majority of people don't get rich. Okay. It's very easy to go on like any of the other, like, I don't know how many people in here have been investing for 10 plus years, but doesn't it seem like every single new investor falls into the exact same trap every single time? And we always see it coming and we always warn against it. And then it happens over and over and over again. And then I try to advise against it. People say it's different this time. It's never different. It's so funny. I don't know. I'm going through this with friends now that are getting interested in investing again. And I'm just saying, you know what? I'll tell you what I'm doing. Not advising you to do anything, but please don't fall into these traps. This, and they always do it every time. I love the idea of getting rich slowly. Yeah, but you know, then continue to invest in companies fundamentally that have great businesses at high margins. It's so important to buy companies that are growing fast at high margins. You'll win every time. Well, not every time, but it's a great way to win. Define slow. Well, I mean faster than the markets, that's for sure. And what I also find is that I've invested in companies that I thought were amazing businesses and had done it expecting a level of return that I thought was amazing. Like, 20+% per year. If this will do this over this period of time, then we'll be very happy players. Even like amidst on this plenty of times, like whenever Palantir was at $50 and he goes, yeah, I know it's a little overextended, but if we just continue to hold and expect a decent return over the next few years, that will be fine. Whenever what you actually see is that the market actually continues to reward continuous execution and can actually push companies much higher than your original expectations would have ever imagined. So my return on Tesla was larger than I would have ever imagined, or Nvidia or Shopify, but I wasn't banking on that. I wasn't banking on artificial intelligence coming out of Nvidia. I was banking on a return for Bitcoin mining companies in 2018, 2019 after a large crash. What's come of that is so much more than I could have ever anticipated. Same thing with SoFi. My original investment was to bet on a digitalization of products and that personal loans and student loans were going to be coming back. I could have never imagined the loan platform business. These things that I did not price on have multiplied the level of gains that I'm now expecting from the company. So I'm, you know, bet for a certain expectations, stay around for the long term. Remember that there's people that run businesses that want to multiply those gains constantly. They're getting stock bonuses. They're working towards these things. They want promotions. Um, people push up stock prices hopefully faster than what we assume, especially in tech fields and in innovative fields that things go faster than what people imagine. The human brain also has a really, really hard time of comprehending compounding growth. And yeah, if you can try to do some of those calculations from time to time, the number grows pretty quick. And like everyone says, like, oh, Warren Buffett got rich quick slowly. But I mean, like, even his fortune at 30 was something that anyone would be happy to have. But his fortune at 30 was what he was probably making on a daily basis in his 90s. So, and that was probably a low guess. But yeah, I don't know. We'll be saying in 2030 that we had a chance to buy Hood at $100 before it 5x to 500 and do a 5-for-1 split. Yeah, I mean, I think Hood is a good example of just continuously betting on the flowers. I mean, clearly, I think that they're a winner. I think that there might be opportunities to buy it at lower prices, but we don't know if that's going to happen today or at a later date whenever the pullback doesn't actually, like, there were opportunities to buy Palantir at 20, and then the next opportunity to buy at a big dip was whenever it ran all the way up to 90 and then drew back to 70. Well, yeah, it drew back a lot. And if you got shares at 70, you're happy. But if you're, wanting all the way back at 20, you're not going to get it. So will Hood drop below 100 today, or are you going to be able to get shares at 100 today and later on it goes up to 140, draws back to 115? Does that make sense? Like, even the drawbacks might be higher than where you were expecting to buy later on in life. Will Noto get a new set of bounce goals after this set expires in June? Yes, I would probably guess so. That they'll just set a new set of performance goals so he can continue to push the stock higher. Not like he needs that, but you want a CEO that's working hard for the business. Even Elon gets performance goals. I mean, yeah. I do hope that he gets some pretty good goals this time around, though. I mean, we still have to remember that the EPS expectations for 2026 are set high. How are they going to get there? It's very, very hard to calculate. If any of you guys have modeled SoFi's growth, you know that things have to continue. Like yes, they're accelerating this quarter, but they have to continue to accelerate. Like, we need to break 1 million members by Q1 of 2026. So it's like 840,000 this quarter, 900 and something thousand next quarter, and then 1 million. Like, we need to pass it soon. If we're on track to do what Anthony Noda says we're going to do, which is also like get to 50 million members by like 2030 or whatever he said. Galileo deals. Everyone's so over excited about the Galileo deals. They'll be fun, but it's not even going to bring in as much as financial services says it. Like, financial services will bring in more. Oh, wow. Are you invested in Oracle? What do you think of that company? I'm pretty positive on Oracle. I mean, I'm a big fan of Larry Ellison. He's pretty outspoken, so you get some risks in terms of that same sort of problem that you do with, outspoken CEOs that can get in a little bit of trouble and their PR team is always sweating a little bit. But I'm not invested in Oracle. I think that it's an unbelievable business and probably going to be one of the largest winners in artificial intelligence this year and probably the next year because they've been so undervalued for such a long time. Those are sort of my quick thoughts. Thank you for the donation. I do appreciate it. SoFi push into earnings? I actually hope not. I hope that, SoFi stays sort of where it is until earnings, and then we have a good pop after earnings. I want them to do well after earnings, so then people stop bringing up this sort of trend as if we go down exclusively on earnings. I want them to show off great earnings and then like just keep it there. Just stay. Price prediction on Nvidia. I think we're over 200 by end of year, if not 220, something like this. We have to head. We have to head higher. We don't have to do anything. I'd be surprised if the market does not price in what Jensen has to say about China sales, about what's going on with the GB300s. Everything's going right. Everything is going right. ChatGPT, Meta, XAI, there's just a full-on sprint. It's insane. So, Japanese markets are up 3%. Holy. Amit says AI. Amit, bro. 4.5 gigawatts from OpenAI says that that's pushing even further. We have, what was it? XAI said that they want, I don't think he actually marked it out in terms of gigawatts of power, but something along the lines of 50 million worth of H100s equivalent worth of compute, which doesn't necessarily mean 50 million chips. That was a little bit of a confusion, but probably means a heck of a lot less than that of very, very powerful chips going forward over the next 5 years. Like over the next 5 years, we're going to have some insane chips that end up getting pushed out. That means generations even past Vera Feynman that end up coming out, which is Nvidia's furthest out roadmapped, chip that the flagship chip that will end up getting released for artificial intelligence. The build out for AI is insane, and probably the quickest ways that we are going to see, or that we know that the build outs are not even close to being done. Meta is building a 23-kilometer build out for their Hyperion supercluster, which is just one of the many other Titan clusters that they're making. Prometheus, and then Hyperion is going to be the big one. But that one is 5 gigawatts. Then the other ones, I think, are 2, 1, 1, 1, something like that. So we're looking at like 10 gigawatts of data spend or data center build out from Meta. XAI is getting tens and tens of billions of dollars over time. It's just insane. Crazy. Absolutely crazy. Yeah, I mean, it would be kind of silly if he just raised $13 billion and then said, hey, we're going to need another 1.2 trillion. Google or Tesla, your pick for tomorrow. Amit, brother, it's Google every day. I'll do Google. I'll have to put that in the notes. I picked Google. Thank you, Amit. I appreciate you participating in the thing. I'll have to buy that tomorrow. See, that's how you guys should do it. Amit's an amazing investor, okay? If you guys aren't following him, please check him out. That's his channel right there, Amit. But Amit's probably laughing. I'm the worst salesman ever. I mean, dude, he's genuinely like the one stream that I do watch all day, though. I mean, it really is true. But look at the names that he gives me. Google or Tesla. Not TSSI, freaking all this pumpy, low $1 billion names. I mean, I'm sure some of you guys are going to get them right, but a lot of them are going down. Anyway, I get to buy some Google. By the way, like the fight right now for talent is by far the easiest way that you know that Nvidia is going to do well, because Microsoft is taking AI talent from Google. Google's taking high AI talent from Windsurf. Meta's taking high talent from, well, a lot of names, but OpenAI mainly. There's just this crazy rush. I mean, and the big winners are Nvidia and also the crazy like AI engineering. These are like what do you call them? Like the Rain Men type guys. I'm sure they're not socially great, but the numbers, they just work up there, They get it. 2, 4, 8, 16, 32, they get it. Okay. Those are the guys that are getting these $100 million checks from Meta. And holy crap. But they're only paying that if they know that artificial intelligence is very, very real. So you know that the CapEx spend is happening. You know that they see the revenue potential. And I was on a call today, by the way, and someone brought up the fact that they think that AI is overextended here. I'm like, how? I mean, this person's also probably a great trader, a great investor as well. But like, how can you put a cap on no human capital stopping this trade? I think the thing that's actually potentially the largest cap is maybe the energy supply that we need, or the demand is outstripping the possible supply. That's probably going to be the biggest like stop here, which is actually why I think like we do need to find some level of an energy name, because that's going to be such a big deal here. But everything is getting automated. It'll only get smarter. I actually think that the claims of how smart they are being over. Like people are saying that they are better than they are. Grok 4, oh, this is multiple PhD students all put together. And then I ask it questions like, hey, what are some highly requested Robinhood products that they want? And they name like 5 out of the 10 that they name are products that Robinhood already has out. So, I mean, in terms of utility for like we're balancing the gauges here, but we will strike a good balance. All right. Look at YouTube back in 2005, 2006. Platform looked terrible. Okay. Look at it today. Technology improves. Billy Jack with a $10 donation. BMNR. Thank you, Billy. I do appreciate that. We'll make sure to, I'll spend your $10 on BMNR stock. I'll put that in the community portfolio. Appreciate the support, my brother. See, Amit, all he wants to talk about is Google. YouTube alone is so valuable. Yeah, and Google Cloud Platform, these are huge deals. But what artificial intelligence does for business, for consumers in general, like we have not even seen. I was playing around with like advanced voice on ChatGPT, and like I'll hit limits on. I'll drive home. I was driving home from my buddy's house, and instead of being on the radio, I haven't been on the radio in 15 years, but instead of listening to music or something like this, I was just on a chat assistant going back and forth with questions that I had and just playing around with, constantly trying to play around with artificial intelligence. But these things are only going to get smarter, only going to help in life. Like, I don't know. I think that the way that we're on our phones constantly is the way that we are going to be chatting with an assistant, something that helps you constantly. We talked about the other day, like how often I think that people are going to be using agentic commerce. I know last time I said, oh, you're going to be giving your credit card to an AI agent and giving it authorization to spend your money. Everyone was like, no way. Guys, I guarantee it. Okay. This is what I mean by like, if you want to be a growth investor, you have to think like just what is the potential of what is going to happen. I'm not being an oracle right here. I'm just using common sense. Okay. The idea is that potentially one day you're going to have headphones in, and then you're going to remember something that you need to do, something that could be done on a computer itself. And if the computer had access to your mouse and ability to use the browser even faster than that, that it could get done, right? That will be accomplished with using artificial intelligence. Oh, you know what I forgot while I'm walking my dog? I forgot to order the dog food. I forgot to order these things. And also, why don't I just get like a treat or something like this? Can you just order that for me? Please. Thank you so much. Let's cap a spending limit just so you don't get caught in some prompt injection attack. Make sure that you keep a $30, limit. Am I worried about getting scammed out of $30 and saying it can only go to Amazon.com or something like this? Like, that will absolutely happen. This is coming. Okay. So, very bullish on that future. It won't just be me that does these sort of things. It'll be everyone. That's why I'm bullish on Shopify. I think that Shopify will be all over this. That they will be connected into the Googles, into the, like remember, Google doesn't even have really an e-commerce platform. They hook up with Shopify. Okay. OpenAI, Meta hooks up with Shopify. They all hook up to Shopify. Wonder if they have a differentiated platform or not. And in a world where people are going to have less friction between them and the products that they want, it's not the seller that I'm betting on, or it's not the individual companies that I'm betting on and how they are going to produce these products and lower the cost via robots and manufacturing and cost of goods and everything like this. I'm talking about the platform in which connects to every single other commerce platform. That's Shopify. Big fan of Shopify. Okay. Some people can say it's overextended right now. I say if you have a decade-long, outlook, just keep. Well, I don't care what you do with your shares, but I'm keeping my shares and just sticking to it and delivering. Okay. Wait, hold on a second. We just got a little update. Oh no. I don't know if we're going to be able to. No, we won't. Jesse Dow ended up sending me a ticker because he donated earlier, and I told him that we'll put it towards the community fund, but he ended up putting it into a fund that he wants me to put it in, which I can. By the way, the assets under management is also lower than our thing, but it is their Argentina ETF. So ARGT. Now, the thing about that, I know that he's been pretty on this for a while. I think the heaviest weighted position in their portfolio is Mercado Libre. So I'm going to reach out to him and see if potentially he'll let me put it into Mercado Libre, because that will be an extreme, I'll be super happy holding on to Mercado Libre going forward. Fintech giant, e-commerce giant, logistics, credit. It's everything I like. Honestly, if you guys look at the companies that I cover on this channel, it's fintech. Okay. It's with credit as well, like banking and stuff. It's e-commerce. It's tech. It's logistics. I love robotics. I love artificial intelligence. All that is extremely beneficial for companies like Mercado Libre and Amazon. Tanner, how does it feel to talk to a screen all day? I don't know about all day, but for a few hours, it feels excellent. Okay. Love it. Tanner, while Amit is here, tell everyone SoFi might get into the S&P 500 before Hood. I already talked to him about it. I think that it is a possibility. I don't know why they're not adding Robinhood. Now, we also have to remember that the S&P 500 is not just there to put in the top 500 largest names. They also tried to go after the top 500 best names. This is why they, very elegantly put in names like William Sonoma, right? Because we all have to have our Giro coffee makers. They could put in a bank that they specifically like if it fits what they're looking for. Now, will the old guard of the S&P 500 take a look at SoFi and look at it as a fintech, or will they just look at it as a bank? Will they be nitpicky about the actual valuation? Who knows? That can happen. They should both get in together. I mean, if that happens, if we get like a rebalance in like December and they're both eligible, I don't know. It might be the first time I cry on stream. That would be the day. Shopify is great, well managed. The team knows they are there for the long term. Shopify is like Microsoft, way easy to allocate sleeping capital. 100% agree. And what I love about Shopify is their ability to just change with the times. Management has been so on it. If you saw Toby Lucky's internal email, that it was leaked so much that Shopify just ended up putting it out into the world. But essentially it just said, hey, like, we are AI all the time. If you're not using AI, we will have like AI school for you to go to make sure that you don't get fired. Like make sure you're using these products, use it or lose it. Okay. We'll get rid of you if you're not using it. But yeah, we'll see. Maybe they're not adding Robinhood because fee-free trading leads to more diversification from ETFs, so less ETF fees. Maybe I've heard this sort of conclusion, but there are other large brokerages that they currently have on there that have started to adopt the commission-free style. It's just the way that the market has always gone. I mean, at the earliest days, we were doing $100 per trade, $50, $25, $15 for E-Trade online for the first time, 10, 7 free. Happens. So I don't know. Shopify for me, just because I'm talking about it a lot doesn't mean that I don't know. In the same breath that I say that, just so then we can see both sides of the market here. They did just get a downgrade, I think today, not large, but just on pricing, right? That it is an expensive company. So if you do look to get into a company like Shopify, understand that this is, for me, like right now, it's a multi-decade company. And what I've always said online is that if I was married to any company, I'm actually probably more married to Shopify and their management, more so than I am Nvidia. Like, that's my company. I've always wanted Shop, but it's always been expensive. It'll be like Tesla. It never won't be. At least the way that I see it. If we continue to see data that shows that like dozens, like I think last time I saw it was like 46 or 49 merchants join on to Shopify's platform for every one that leaves. The amount of merchants, these are two companies that I hold, Salesforce and Shopify. The amount of merchants that switch off of Shopify, Salesforce Commerce and go over to Shopify is insane. The conversion ad by going like average for Salesforce Commerce switching over to Shopify is like a 36% increase in their average conversions. It's insane. Imagine adding 36% to your top line just by switching, your back-end provider. Right? And this is only the products that they have today. That's the thing that I like about Shopify is that they have additions where they show off the new products that they end up putting out. They do this twice a year. And roughly about 150 or so new products, whether they're small or large changes, are shown off every 6 months. So even if you guys aren't looking at Shopify too deeply, it's always a fun ad. They do a summer edition and a winter edition just to see what has been changing on their platform over the last little bit. Toby Lucky is definitely my top. That would be like my top interview. If I could ever talk to Toby, that would be crazy. Unlike you, I am a graph looker atter. The graph on the stock nerd centerfold, freaking gorgeous. All right. Well, hey, I like confirmation bias. If you're telling me that the TA looks good too, happy to have it. It's also Canada's most successful company, which honestly had nothing to do with my involvement. I just some of the earliest companies I could wrap my head around e-commerce. Tell me if I'm wrong. I don't get like I'm not in design. I'm not making these sort of products, but like, why does the market hate Adobe for artificial intelligence, but doesn't hate Figma? Like, wouldn't these types of products wouldn't artificial intelligence, as it's getting smarter, make it easier to try to replicate a product like Figma? But the same sort of thing can be said about Duolingo, and people get excited about that name continuously. But I'm not, super into that. Figma is using AI. Yeah, but that's no reason to. I mean, Adobe is using AI. Duolingo is using it. Every single company will use AI. But hey, I'm not. I don't care too much about the name personally. Duolingo has a ton of voice data, right? Oh, let's not get into it. I mean, Duolingo could be a great business as well. I don't have to bet on every business. That's the amazing thing, right? Like what Warren Buffett used to talk about. It's like you can be a great investor and not have to swing on every name. I don't have to take a bet on Figma. When there's more data that comes out and I get to hear the earnings calls and see that sort of stuff, I'll make a better bet. But historically, IPO betting has not been something that I've been into. When is Figma live? I think it's July 30th, if I remember correctly, 31st, one of the two. It's definitely one of the two. I'm willing to take stupid bets when the market is stupid. Yeah, but when it's like a game of musical chairs. When does it stop? And whenever the music stops, you're holding that freaking chair or sorry, you're just standing. What then? I don't mess with it, man. I let people take those bets. I find that's perfectly okay. I hope that, retail makes money on those trades. But I will feel very good betting on the names that I know very well. I promise you. Like, there will not be very many investors that go, oh, you know what? During that massive AI bull run, like, I think I was poorly positioned in Nvidia and I should have been in Open Door and Coles and Zeta and all of these other names that people are saying, which I'm sure, 50% of them will be amazing. I'll be fine in Nvidia. Nothing against Zeta. I just the first name that came to mind. I know I'm going to get some pushback on that. Let's just stick to making fun of Open Door. I think most of us can get behind that. I think even some of the people who are betting on it don't even really believe in the company. They're just like, hey, it's retail. Um, Shopify is amazing, but Canada has Brookfield Corporation, has to be the company number one. In terms of size, Shopify is number one. But Brookfield is big for sure. Shopify is number one. And then I think the next one's RBC. The big banks have huge market caps here. And by huge, I mean like not even mega caps for you guys. You guys wouldn't even start counting them. Um yeah, I mean, yeah, you can call it whatever you want in terms of not, but like it's just not the type of investing that I'm into. And I think that some people may say that I don't have the gut for it, but also I think that many of the people who are into those types of trades are actually pretty newer investors. Yeah. I think the thing that could happen is some people could mess up and lose a little bit of money. It's very, very hard losing 50% of your net worth. And then you have to make another double just to get back to where you were. God forbid if you lost more than 50, if you lost 80% or something like this. And Wall Street Bets continues to be like right now, it's all nothing but like, let's just remember 2022. The pages got flooded with screenshots of people losing 80, 90% of their net worth. Those people are not participating in this 2025 exciting rally. Those people are out forever. So, yeah. Um, Ramp is hiring a professional Redditor. Yeah, the world's changing for sure. I'm not a big stock twits guy either, but to be honest, I haven't used it very much. I don't know if there is like a like the types of investors on there. What's so funny is like it's funny that people are like that I'm looked at as being risk adverse because there's some groups that I get around where I'm like the most risk like involved person. Most people are like ETF investors or dividends or some level of value plays, stuff like this. I'm 100% growth in tech, and then people go, "Oh man, this guy's got no balls." It's like, okay, jeez. Um, get back on the horse. Yeah, what they won't though because they think the game is rigged because it goes down. It went down whenever they played it, so it must go down. Um, let's be honest, we're in a bull market. No one, zero people are questioning that. Bull markets are good things. I think what you might mean is like a manic market, things that are getting frothy. Bull markets are good. You want bull markets for long periods of time. And I think that we are in a bull market. In fact, let's actually take a quick listen if I can get this up. But there's been some comments about how we may still be in a very good market, good trading market, good credit market. Let's take a quick gander at that in a second. But while we wait, I also wanted to see JP Morgan is also eyeing crypto-backed loans. That was pretty interesting. We talked about Western Union. Let's bring up this news really quick. I just wanted to listen to this interview. It's pretty quick, showing about the credit market right now. You can't hear that? Can't hear? Okay. Why is that? Tell me if you can hear this.
Ethereum and Bitcoin touching new highs in recent days, and SPACs are back. So a month after you said so, do you still see this as one of the best trading markets?
Yeah, so trading market doesn't necessarily mean we're going straight up. By the way, one of the reasons I think the equity market, multiples are not great. The amount of cash that's out there.
Let's just quickly rewind, because it is important to know who he is and everything. Sorry about that.
BlackRock CIO of fixed income, Rick Reeder. Rick, you came on Closing Bell in June, and you said, this is, and I'm quoting here, this is the best trading market I've seen in years. We're hovering around all-time highs again. How much of this is just glitter without substance? Because we have a meme revival on Kohl's and Open Door Technologies that they're soaring. Ethereum and Bitcoin touching new highs in recent days, and SPACs are back. So a month after you said so, do you still see this as one of the best trading markets?
Yeah, so trading market doesn't necessarily mean we're going straight up. By the way, one of the reasons I think the equity market, multiples are not great. The amount of cash that's out there and the lack of supply of equities relative to buybacks. Listen, the technicals in equities are extraordinary. So I think that continues. That being said, the reason why it's such a great trading environment, you can sell, we sell a lot of call options against our equity positions, allows us to buy some downside. Selling volatility both in the rates market, the equity market. This is one of those things that people are buying insurance because they're worried about the news. Doing things like selling volatility. You get, like today, extreme movements in a lot of equities. The ability to go the other way on some of that, look at structurally what's mispriced. I think, by the way, the news flow is rapid and continuous, and the ability to actually take advantage of it, I think, is phenomenal.
We have this whole macro backdrop of tariffs, trade wars, geopolitical instability, so much so that we had a report from Swiss Re, which is this global reinsurer, saying there is likely permanent brand damage to the U.S. being considered a safe haven, and that international investors may demand a higher premium for holding U.S. assets. You have that, and then you have companies just on fire with reporting earnings. How do you balance those two sides of the scale?
So you go back to the point about why this is an incredible investment opportunity. So you go back a couple of months ago, people thought the economy is going into recession, maybe deep recession. Fed's got to start cutting in June, 50 basis points maybe. And then people realize, when you actually look at the data, including post-tariffs, U.S. economy is the most extraordinarily resilient economy. You can throw an awful lot out of it, and it just tends to move along. Today, we meet with international investors every day, including today. And you think about, gosh, these technology companies, there aren't a lot of those in the world that have that sort of top line revenue growth, throw off that much cash flow. That the thought that people will divest from U.S. equities, I think, is a challenged one. But one of the things that's interesting about, we do a lot in the debt markets, you talk about the treasury market and people say, gosh, if I'm an international investor, it costs me because of cross-current, because of the hedge the currency. So you're seeing a little bit of, gosh, how much do I need to own in treasuries from international investors? But the U.S. equity market, it is pretty hard to replicate.
On that fixed income side, on bonds, how much are you looking at corporate bonds as the place to really get in there and enjoy the yields that we're seeing right now, the kind of income they're producing?
A lot.
And for what window? How much longer?
So I think a year from now, 2 years from now, we could debate, is the new Fed chair going to come in? Are we going to drop rates? How does it? I think today, if you said to me, gosh, we can create portfolios that are 6.5% to 7% without stretching quality-wise. Credit is in, I've been doing credit, I shouldn't say how many decades, but credit is in the best shape that I've ever seen. Company post-COVID, they termed out their debt, their free cash flow generation is great, their interest coverage is great. And so people say interest rates are higher, it's going to slow down some of these companies, particularly investment-grade companies. They've termed all their debt out. It's not stressful at all. So I like just taking that yield. The thought that we can, the Fed will cut rates, but we're still sitting in a place today. By the way, not just in the U.S., you could buy a lot of European debt, swap it back to dollars, and your yields are phenomenal.
I think that's a great way to wrap that up. I mean, very, very excited that people are still very bullish, but someone actually in chat just quickly reminded me that we saw some pretty exciting news that I want to rotate into. So this is very important before we go. Well, it's going to be a while for us to get through this, but this is very important to wrap up as well. Tevis on the SoFi weekly show, the Fintech weekly show, whatever, he just put out his Q2 predictions for SoFi. Now, we recapped this yesterday. I showed off 840,000 new members, 1.2 million new members, 7.5 million tech accounts. He has those a little bit lower than what I would have anticipated that coming in as. Now, for revenue, he has 850 million, guys. This would be such a massive beat. I have 835 million, which is also quite a large beat. Wall Street, by the way, is expecting 804 million. So coming in at 850 will be a massive upgrade. Tech platform, I think, is going to be pretty well in this range. Financial services, lending, I think those are all going to be in the right range. Corporate, he has that negative 20 million. I actually think it'll be closer to double that, but that's his prediction here. So quite a large amount of revenue, but then that flows down into EBITDA at $242 million at a 28.5% margin. Net income at 90.1 million at a 10.6% margin. Both margins are higher than what I had placed them at, putting him at an EPS of 8 cents, which is on the upper bound range of what Wall Street is expecting. Okay. That could potentially happen. I had it at 7 cents. I think that they will be more in growth mode, less like SoFi. Yes, very exciting company. But does that mean that we get all of the revenue with all of the member growth at all of the margins? I don't know. I think partly what SoFi said for 2026 is that they had a EPS range of 55 cents to 80 cents. And what Anthony Noto recently said is that if they get closer to 80 cents, it's because their growth efforts were not that great. They didn't want to reinvest in the businesses heavily. If they got closer to the 55 cents, it's because they were so heavily reinvesting back into member growth and all of these things that a higher percentage of their actual earned dollars went back into reinvesting in potential growth initiatives. So I think the same thing happens on a quarterly basis, that if you are expecting the highest level of revenue, that probably doesn't also mean that we get the highest level of margins as well. Hopefully he's right. Hopefully SoFi surprises him to the upside. I mean, that would be the ultimate, upside for SoFi, but we'll have to see. I'm bullish. We will see. Okay, let's see here. It was in, I don't know. I think SoFi is going to do well after earnings. I have a different point of view than others, but yeah. People said, how are futures doing right now? They're all green, by the way. NASDAQ's green, S&P 500 futures are green. So things are looking well right now. Yeah, they look fine. All right, ladies and gentlemen, unless there's something else that you want me to touch on, we covered a lot of things from the, Trump Japanese deal to where, Wall Street's thinking about the markets right now, to all of the stocks that I see in artificial intelligence, fintech, everything. If you guys are new to the channel, now I'm getting a sore throat for some reason, please, all I ask is for you to like the video, subscribe down below, and that's it. I'm live every single day, make videos in between that. So thank you all so much for watching. Really do appreciate your time, but bye for now.